Good morning, ladies and gentlemen. Good morning to those who here are in Berlin locally, and a warm welcome also to those who participate online. Today we are hosting the panel on embedded finance at the Asia Berlin Summit here in Berlin-Kreuzberg at the beautiful location of Spielfeld. My name is Engelhard. I'm Commercial Director at TOOM, previously branded Modularbank. An instant payment at a checkout, payment processing, card services, or an installment or a credit limit at the point of sales or in the online checkout process are just some examples where you find elements of embedded finance today almost everywhere in your daily life. Today, the aim of this panel is to discuss where does this development come from? Where did it emerge from, both in Asia and in Europe? What is today's ecosystem? What are the drivers, the elements, the players, the perception of the clients in the market? And where will, in the end, this lead to? What is the outlook of it? Will it contribute possibly also to elements or topics like financial inclusion? Can it help let's say, to serve also, let's say, financially underserved, which don't have direct access to banking services. I welcome today my panelists for this discussion. Here on stage, Luca Frignani, CEO and co-founder of Exaloan. And online, Miriam Wohlfarth, founder of Ratepay, and also co-founder of Banks and co-CEO of Banxware. Then, of course, Enno Einfeld, he's the CEO of Finiata. And of course, Sonal, very warm welcome that you join us from India. She's the Director of Financial Services at Flipkart. I would now, first of all, give the opportunity for the panelists to introduce themselves. Start with you, Luca. Please, just some warm words on you.
Perfect. Thanks so much, Till, and thanks for having me on the panel. So Luca, CEO and co-founder of Exaloan. Exaloan is a Frankfurt-based fintech company with a mission to close the global financing gap for individuals, entrepreneurs, and SMEs. That's why we operate a global B2B marketplace on which we connect institutional investors like banks, asset managers, and pension funds with digital lending platforms. So we're all about developing software in order to connect traditional financial institutions with fintech lenders, because we firmly believe that this will create a more efficient and also more inclusive lending ecosystem.
Miriam, do you want to continue?
Yes, great. Thanks for having me. Unfortunately, I can't see you. I can see only my co-virtual speaker, but we can't see you. That's a bit irritating, to be honest. So, hello, I'm Miriam Wohlfarth. Nice to meet you. I'm in the industry since a long time, in the fintech industry, founded Ratepay 2009 and founded Banxware just 1 year ago with a couple of other, say, companions. So what we do is embedded lending for platforms. We integrate a solution that there is a revenue-based lending available for any platform. So free that any platform can offer, let's say, financial services. That's what we offer. We started a year ago and had a seed financing round in February, and are of the life of the first customers now and are a growing business. And nice to see you here.
Thank you, Miriam. Sonal, please. Thank you.
Hi, everyone. It's nice to be here, and thank you for having me on the panel. I'm Sonal, and I lead the financial services for Flipkart. Flipkart is India's leading e-commerce platform. And what we essentially focus on is utilizing embedded financial services to offer accessibility and drive affordability for millions and millions of Indian users. It's great to be here.
Thank you. Hello, Enno. Hello to Hamburg.
Hi, Till. Also, thank you very much for having me. Really being a pleasure here on board. So I'm the CEO of Finiata. Finiata is a direct-to-market, also embedded lending provider, very much in the market for financial inclusion towards small businesses. We think small businesses are the backbone of every healthy economy globally, and at the same time are the or is basically the segment of every economy that struggles the most when it comes to getting their liquidity issues in order. We're in the market to support them, and we're doing this directly as an on-balance sheet and direct-to-market lender, so under our own brand. And we're also an embedded lending provider supporting companies from the e-commerce industry. There's many marketplaces, FMCG, transportation, financial services industry, in providing embedded lending products to enrich their own products towards small businesses.
Thank you very much. Before we start with the first question, I would like to highlight that we here are using for the event the Prella app, where we also embedded, of course, the possibility for you in online to ask questions. So just please simply use the app inside where you stream it and bring up any questions which might be of your interest during the discussion. So starting with Miriam. Miriam, Ratepay. Looking at Ratepay, which founded in 2009, I mean, this was founded, was the first, let's say, company who provided buy now, pay later as a service model in the market. And this at a time when basically the word fintech in that sense was not yet part of any dictionary. So, and maybe what has been the drivers back in that time, and how did you respond to that?
Actually, the drivers, and I think they're always the drivers, are the customers. Yeah? If you see customers that want something, that need something, and then they don't get it. And I think if you really listen carefully to what customers want, you can build great products. And for me, at that time, I just, I saw that there is a need in the market, because in Germany, people liked to pay via payment upon invoice. So buy now, pay later is actually called payment upon invoice in Germany, which means you buy something, you receive the goods, you pay it afterwards, and you pay it afterwards maybe within 14 days, but also maybe with installments. So this was basically what people understood with this term. There was no buzzword about buy now, pay later, but it was just a learned behavior of Germans buying in catalogs, ordering stuff, getting it shipped home. And, I really like this because, well, I was in the market working with the customers for tech companies and payments. And they always ask me, hey, Miriam, why aren't we getting a better service in Germany for this buy now, pay later thing? And I really thought, hey, why is it like this? Because only huge companies offer this, like the Otto groups or the big former mail order houses. They had this in-house because they had all the processes. They had maybe, if they needed license, or they had banks in-house or something. So they had solutions to build it, but it was not a product that any other, let's say, market player could use. So I really wanted to democratize this kind of payment method. And that was the reason actually that we built a digital solution to offer this payment upon invoice thing. And we offered it for many platforms, and we built it into platforms and with large merchants. And it was already an embedded financial service. So meaning a shop or a platform that has no, let's say, financial business is able to offer a financial product for their customers to make them a better user experience. So this was actually the driver, was the customer. And I think today it's also the customer, because the customer is really demanding. They want nice processes, they want good UX, and they want personalized goods that really, let's say, reflect their needs. And you see a lot of verticalization also because the customer is more demanding.
Yes.
Hope this answered the question.
So purely customer driven we see here. So that also the demand, of course, to have these kind of embedded services, not any longer necessary to go to the bank to conclude the financial services, having it directly where basically you buy the products. Might it be the old fashioned, let's say catalog at that point of time, possibly still, or today the e-commerce online shop, of course. Thank you so much. And looking at Asia, maybe also in similar times, Flipkart, founded in 2007, having today a market share in India of almost 60 to 70%, can definitely be called a success story, also in regard of embedded finance. Just Sonal, maybe can you help us, maybe also for us also in Europe, to see what have been, let's say, the elements of embedded finance or the products you basically introduced, which brought this very successful, let's say, development to the market, and also, how have you responded possibly to the demand of embedded financial services there?
Sure. Thank you so much for that question, and really glad to share, how Flipkart has at least worked on ensuring that we are integrating embedded financing programs in our journey. I think early on, right, our motto was always very simple. And we said we are going to empower customers through better offerings, and we are going to focus on integrating the services into the consumer's everyday lives, right? And we've been working towards this since 2007. I think early on, where we started focusing was definitely the embedded payments offering on the platform to our customer, right? We do not redirect customers to any external portals, but what that essentially means is that we have actually entrusted the entire process within our own platform. This means that we are operating a very complex algorithm or a system at the back end, right? Which takes care with associations with banks and networks and card players. So essentially, we are operating like an embedded payments program created in-house for ourselves at this point in time. Again, it just serves the dual purpose of ensuring that we are able to contain the consumer experience, offer a very frictionless, superior consumer experience at the time of checkout. And of course, we wanted to continue to learn about our consumer habits so that, when they come next time, we can always continue to offer better and better experience to them. I think about 3 years ago, we actually started, evolving from there, and we actually started focusing on embedded lending. And the reason for that is that we realized that, India is a complex and a diverse country. We still have about 250, 300 million Indians that will not have access to credit, or credit in a form and shape that can actually be used for making purchases online or offline. So we decided to actually harness, again, the power of data and digitization and the platform that we have to, go back to the customers and offer them very specific financial services and programs that are customized to the needs of their purchase on the platform at a specific point in time. What we do is, whether, depending on what the consumer is looking to purchase, we offer maybe buy now, pay later. We offer, financing schemes which allow you to pay in parts over 3 months or 12 months or 24 months. In some cases, we'll allow you to extend it up to 48 months, choose the type of interest rate you would want to pay. So that's what we are doing, because we want to ensure that each and every consumer on the platform has credit available in a type and form that is required by him or her to make the purchase of his choice at that point in time and not really delay. So that's what we've been focusing on. And similarly, we do it for our sellers, right? What we do is that we, again, sort of focus on this very embedded finance vertical depth program to ensure that, our seller partners have options available to them, which are, again, customized to suit them, for the supply chain financing, for their working capital offerings, and invoice discount-based methods, and so on. So yes, that's been a journey. And I think at the heart of all of this has been, as Miriam said, right, listening to the consumers, what they want. Consumers are very clear. They want simple, holistic, digital experiences from platforms. And I think they're making it very loud and clear. So you've got to serve them the best way you can.
Mm-hmm.
So the success story, maybe we can sum this up, that you're both serving the end clients, so the B2C part, as well as the B2B, both on our own platform. So both the embedded finance is for the end user, as well as for the marketplace participants who are there. Okay, this sounds super. And maybe just also to unlock, or can you somehow unlock the secret also, what basically brought you to a 60 to 70% market share in that sense? Was there no competition? Were you the only player in the market? Or what did it make it so successful? Is there some kind already, I would not call it dominance, but a clear, let's say, market share versus the competition?
Sure. I think, the successful ingredient for any business, for that matter, is obviously focusing on the customer's overall experience, right? The product fit has to be perfect if you're looking to drive loyalty among your customers. And I think that's what we've been focusing on. The way we've been utilizing the embedded finance programs or any of these programs in our platform is to ensure that there is a very direct output in the terms of customer stickiness or the customer's value proposition outside on the platform, right? For instance, when we operate a lending program or a financing scheme, we understand that essentially leads to customers spending 3x times of what they would have spent otherwise on the platform. Similarly, when we power some of these payment-led embedded programs, we for sure know that this leads to actually an input in terms of the transaction metrics that we see on the platform, which means the number of transactions that we can actually process in a second grows up by about 250%. So I think some of these programs, the way they have been integrated into, from the journey of the consumer coming onto the platform and finally making a purchase and exiting the platform and starting the cycle all over again, it is just entwined in a way in a customer's journey that is so simplistic that it's driving a repeat purchase behavior pattern in a way that is just fantastic.
Okay, so yeah, so one major part maybe to I take out there is also the customer experience, and somehow that you accommodate also in an appropriate way the user journey in that sense. Luca, from your point of view, does, let's say, adding financial services to non-financial companies in that sense, or not banks, how does it support the user stories and the experience of the end user in that sense?
Yeah, it's a fair question, and I think the main aspects have been very nicely already pointed out by Miriam and Sonal. Embedding financial services, and one of the main drivers of also the buy now, pay later boom that we've seen, also on e-commerce platforms, is mostly this reduced friction. This, the customer journey that the end customer, when they do purchase some goods, they do not need to make complex decisions. They don't need to think too much about, what kind of service they are going to use, because they can just get this buy now, pay later right at the checkout, and it's basically ingrained in the whole journey. So that simplicity and reduced friction in this whole process is a main driver. And when you look also at the other side of the market, I think embedding financial services into a platform is pretty appealing also for e-commerce platforms, because it gives you maybe new ways, better ways to actually serve your customers, to interact with your customers, maybe increase transactions, and even looking a layer deeper. Essentially to the companies that ultimately provide some funding and that interact basically with the BNPL service providers. It also allows to open up either new digital channels, or it provides even like investment opportunities, basically, if you think about the layer behind.
Yes. So also coming a bit later to what your company does, also in other contexts, I think you're supporting especially also this, what is behind the curtain, what is not directly seen by the end client in this ecosystem today. But one question to Sonal, but also to all other panelists. Has embedded finance already changed the perception of financial services, the self-certainty of the availability of financial services from the end user perspective?
I think it definitely has. At least that's what we continuously witness on the platform. And as I said, right, consumers are very clear on what they're expecting from the digital platforms that they follow or they operate at. They are seeking those holistic experiences, and they understand that it is facilitated by an integrated ecosystem of banks and the platform that they're on, and maybe some other layers. But for them, the key aim is that they're being given the financial offering on that one single platform. So I think there's definitely a change in the perception. It's becoming more clear. It's like Darwin's theory of evolution, right? There were multiple iterations and mutations in the way we were operating, and we were giving these services to the consumers. But eventually what has happened over the last 5-6 years is that it has all culminated into this one single word, which is embedded finance. And it's a very consumer-facing word for sure.
I think it's also because, some brands, they have gained so much trust. So if you look, for example, at Tesla or Uber, so people got used to that. They get the payments integrated there, or with Tesla, they get the insurance integrated. So it's much easier for them. And they like to have many things on one point. So they don't want to use different apps and different things. So they like to have one, let's say, digital home with most relevance for them. It's also about the, let's say, great holistic service. And yeah, I think that's also the demand of the customer. It has to be easy and very relevant for them.
Enno, what is your view on this? And has it also brought, let's say, game-changing elements to the market itself? Is there any kind of disruption out of this embedded financial services which has come to us?
So as Miriam has said earlier, I think it's very much all about the customer. And when you look at, especially small businesses in our case, typically you see that those people are great at what they're doing. So the baker makes great bread and the, plumber lays great pipes. But the thing in the end is none of them typically has an MBA, and none of them has an understanding typically at the CFO level of financial services products. And this is, I think, the disrupting and game-changing element with embedded finance, no matter whether you're talking about embedded lending or any other financial services sector that is being embedded into other products and service offerings. I think with that one, you're opening up in an embedded way financial services products to the masses that have not had an understanding of them and did not have a proper access to them in the past. And I think this is the game-changing and disrupting element that is currently happening out there in the market. So what people like Andre Barriat in Germany have been saying in the past, it is about unbundling banks. So it's about unbundling the value chains, traditional value chains of banks. This is actually happening all over the place right now.
Okay, and this brings us also, to the let's say also to the subtopic of today's panel, that every company can be a fintech and offer financial services. And when we look at this, Luca, what is your view on this? Is adding, let's say, financial services really doing or bringing every company to act like a fintech company in the end to the market?
I think that is, it's a great question. I have a quite purist stance in terms of the definition of a fintech. So I wouldn't necessarily agree with that statement because suppose you take an example of an e-commerce shop that integrates a BNPL solution in order to sell books online. So yes, you have the brilliant customer journey, but ultimately you're still selling books online. It doesn't change your business model as such. And so I would not conclude that, just by integrating these services, you become a fintech company, because as a fintech, you maybe also have other revenue drivers. Your business model is different. You're subject to different licensing, subject to different regulations. So I would very much keep these two things separate.
I would rather say every company can offer financial services. Maybe that is not becoming a fintech, but can offer it. That's maybe.
Yeah, agree.
I mean, it's a very catchy phrase. I think first coined by Andreessen Horowitz in the United States.
Yes.
I think in a way it makes sense, but in a way it doesn't, because like in the end, yes, you can offer financial services as a non-financial service player, but it's very much about the technology behind and the technological challenges that need to be addressed and need to be solved. And I think this is why it makes so much sense to go for such an embedded type of an approach, because you, as the, let's say, online bookseller in Luca's example, you just focus on your core competency, selecting, curating, and selling books. And you have somebody else taking care of your financial services challenges from a technology, from a regulation, and from various other standpoints.
I think I sort of, I would actually not take a purist, but sort of a hybrid approach, right? In some cases, depending on what is the scale of your business, I actually completely agree to Enno's point, right? It would just make much more sense to, for instance, partner with certain providers of embedded financing programs or the platforms that can enable that, because your core business is something else and you've got to focus on that. And mostly the core business is definitely very enterprising in nature, right? And then, there is another part, which is there are certain companies who have already reached a mass scale, and it could be Tesla, for instance, or it could be IKEA, right? Like, for instance, Walmart recently, is partnering with a fintech company and a financial company because they are getting into financial services. So is IKEA buying a stake in the bank, right? And the reason for why all of this is happening is because there are these companies, right, or these platforms that have actually become mass leaders, and therefore they need much more control in the way they are creating some of these experiences, they're creating some of these products, and therefore they want to play a much more larger and integrated role. So I think, it's sort of an approach where, depending on what is the need of your business, where you are in your journey, you take a call in terms of, how do you want to continue to grow further and serve your customers better.
And also, also Enno, you already, let's say, touched base on this part that also there are technological challenges connected to the offering of embedded finance models. And here it would be also maybe good for the audience to understand a little bit what particular, for example, your company, Enno, and Miriam, and also Luca, what kind of enabling elements do you bring to the market to help, let's say, non-financial companies act as offering financial services to the market?
I mean, when you take a step back and look from some kind of a distance at an embedded lending offering, then you typically end up in some kind of a triangle that you're trying to solve. Meaning you have on the one hand, let's say, the book selling platform. You have on the other hand, the end customer on the platform. So in our case, a small business. And then you have a financial service provider doing the refinancing. So basically getting the money into the mix here. And you need to cater all of their needs, all of these three different types of needs that are happening in this triangle. And this entails mainly the technology finance, the technology challenge. Because what you want to do is, and this is what Finiata is very much in the market for, we're reducing friction with especially the end client and the financial services provider in a way that risk return profiles on end customer side can be matched globally to risk return appetite on the refinancing side. And with that, on the Finiata platform, as one example, we're making sure that a Japan-based, multi-trillion venture debt and venture capital provider is now financing Spätis in Berlin, Neukölln, so small convenience stores. Something where when you imagine you'd be running a convenience store in Berlin, you'd be calling them and saying, hey, I need capital. I'm not sure whether they would even pick up the phone. And this is what it's all about. And this is all solved by technology in the end. And this is what entails the technological challenges. You have to basically be in the market for three parties at once.
And before coming also to Banxware and the offering of them to the market, maybe Luca also, because Enno was talking about this triangle, and this triangle on the one side, you basically have the service provider and the end clients, but you also have, let's say, the financial industry in the background who are basically also refinancing, and Enno was talking about risk appetite, which can be defined there. And I think your company does pretty well this part of the game and supports embedded finance from that angle. Can you please maybe leverage on that?
Exactly. So ultimately what Enno described was one part of the triangle, and we're pretty much on the other part of the triangle, where any service company that provides refinancing to, for instance, marketplaces, they need access to a broad either investor pool or somebody who basically does the refinancing. And very often there is a gap, a technological gap, also even to just compare the offerings, compare different platforms to find the right loans in order to define the risk appetite, and actually set up this automated funding and financing processes. And that's exactly what we simplify on a platform by providing the standardization and a standardized risk assessment.
And curious, what are the investors to embedded finance? Who are they?
It can be anyone, really. It can be asset managers indirectly, then and then building investment products, for instance, and then selling this either to institutional clients, to end clients. When you see maybe less traditional BNPL providers, but digital lending platforms, we also see some of them moving into the point of sale financing and BNPL space. So it could even be sometimes retail investors providing funding and directly financing loans.
Okay. So basically also, also for the audience, providing basically the cash in that, let's say, embedded finance can live, that basically the money, there's also funds available for extending loans and microloans and financial services to the clients, which is then possibly resold on the other side to institutional investors and other investors, as you mentioned, right? Correct?
Exactly. So digital financing processes only work with digital refinancing processes.
Exactly. Super. The money has to come from there for to go into the market.
Exactly.
Right. And Miriam, Banxware, where do you see yourself in this triangle, which Enno already highlighted?
Say most of our part is actually the underwriting and the risk management system. This is what our heart is basically. So what we build is a revenue-based lending, and because we believe also in smaller and underbanked, because there are lots of gaps. And if you imagine you are an e-commerce merchant selling online at Amazon or eBay and so on, you are now maybe 1.5 years old and you started during Corona. Your business has been growing quite nicely. But now, I mean, it's almost Christmas business coming. So the last time of the year, you need money because actually at the moment you would like to make an investment into media, you would like to make an investment that you hire some people temporarily, and you maybe need to buy packing material. So this is all kind of different business needs that you have. And it's difficult at the moment when you are a very young company, you don't get any money from the bank, especially money like cash. Yeah, it's not about factoring an invoice. It's actually you would maybe need 50,000 euros in cash to help you support this need what you have. And what we did basically is that we take a look at all the revenues of the last 6 months, and we evaluate these revenues and decide after, let's say, looking at the revenues, what kind of, let's say, what amount we are able to offer to this shop. This is basically the business what we do, because we think at the moment credit decisioning in classical banks, there you don't look at revenues, you only look at financial statement sheets. And so that's a bit of different, a new kind of, let's say, lending technology. We see us more as a provider for lending technology, say it like this.
Okay, thank you, Miriam and the others. Sonal, maybe also we're looking at the ecosystem we have and the offering which is in the market to the end clients. Has embedded finance to some extent diversified also the offering which is available to the end users? Or is it possibly only some kind of rebranding already existing products which have been previously directly offered by the banks? Or is it a mixture of both maybe?
It's actually hybrid. It's truly a mixture of both. I mean, in some cases, you will see that the reason why embedded finance is so successful is because it definitely solves it. I'm talking here just from the perspective of the consumer. It's all about increased access. It's about improved customer experience. But at the last, it's actually about customized offerings, right? Because some of these platforms are much more clear on the needs of the consumers that they're trying to factor to. And the last pillar, which is the customized offerings, is actually could be like a massive differentiator. So various embedded programs that we actually see today, at least I can for surely talk about the Asian market, all of them are customized to meet the needs of the consumers. These are sachet, unique customer offerings that are not offered by the classic banks today. Of course, they might be built on, the genesis of your typical cash loans and credit lines, but the way they are broken down into different multiple parts and then sort of packed together to actually offer to the new Gen Z, or for that matter, the new scale of businesses that are coming. It's truly new from that perspective.
Thank you, Sonal. And when we look also, particular, let's say, in this ecosystem at the banks, which are also classically, of course, part of the ecosystem, and does it increase possibly, or does it bring competition to banks when companies offer financial services? Or is it more that basically the companies act as an extended offering arm of the banks, possibly here? Maybe Miriam and Enno, what is your view on this question?
think you see both maybe. So there are, let's say, I think lots of banks are, are helping fintechs, are partnering with fintechs. So we see a strong partnerships there. But there are also banks maybe that are still, they don't really, they see they see fintechs as competitors. Maybe they don't want to partner. For them, I think it's difficult in the future because the role of banks, I would see that it is changing in the future more to infrastructure providers and to big, let's say, gatekeepers. Yeah, so they are the big securities, the security provider in the back end, which I think is quite good. And but maybe they are losing a bit the interface to the customer because they don't own the technology anymore. That is what I see in the future a bit.
I couldn't agree more on that one. I spent something like 2 decades, I would say, in the traditional and also digital, and this is now becoming traditional, to be honest, banking industry. And when I look at my former colleagues, I would say it's a bit half and half, where half are saying, hey, that's an interesting business proposition that you're having with your funny fintech thingy. Let's try to work together. And the other half says something like, oh no, that's competition and I'm not going to fuel my competition and so on. And I think we have seen like globally dominating, or at least dominating really states in Europe go down on protectionism. And this is the same thing that from my perspective over time is going to happen to industries that behave that way. So from my perspective, it just doesn't make sense to see fintech in general or embedded finance or embedded lending and banks competing. I think it's more some kind of a great setup for cooperation because there are things that fintech companies are much better in than banks and vice versa. I would never start to compete on balance sheet management with banks, something that banks have been professionalizing for centuries, while I think it just doesn't make sense for a bank to come up with the idea of inventing a digitally driven credit decisioning algorithm like Banxware is running or we are, because you just don't have the access to the talent that you need for that, and you don't have the level of experimentation inherited in your culture inside the corporation. So this is something that I always would try to outsource. And I think we're far beyond this point where fintech CEOs used to say, we're eating you all up to banks. Very, very famous sentence I heard 5 years ago from a, what is it now, consumer bank CEO, then fintech, in Berlin, not giving names here. This is something that would never cross my lips. But on the other hand, I also have to say, if you are not up for cooperation, I think neither on the fintech side nor on the bank side, this is also not going to work out.
Okay, so also the embedded finance basically also provides the opportunity for banks and non-financial companies and fintechs basically to work together in the market rather than competing with each other on the client, right?
Absolutely.
Yeah.
Yes.
Absolutely. This is the thing that I mentioned earlier. We're working for a multi-trillion Japan-based asset manager that would never be able, and I would also say nor willing, to go for small businesses somewhere in Germany on, I don't know, Berlin on Kotti or something like that. But on the other hand, from a from a risk return profile perspective, it makes a lot of sense for them to do so. So there needs to be somebody in the middle reducing the friction to a level where that becomes possible. And this is what we're in the market for. So this is why I said in the beginning, it's about financial inclusion. It's about including small businesses in our case into the global world of global and really network world of financial services. And on the other hand, making these customer pools accessible also for the large scale balance sheet owners.
Thank you so much. And maybe connected, maybe also Luca, to bring you into this part. Where do you see the challenges potentially for banks to interact basically in this new ecosystem, which actually we learned it brings advantages to them because they're not any longer competing in this segment with other companies, more can leverage on a cooperation or relationship with them towards the end client.
I agree. The high value definitely going forward is in cooperation between tech enablers and essentially, you know, institutions that have the balance sheet and the funding power. And I think the main point of friction is, or the biggest challenge is probably a cultural one, that it is kind of a new world out there, and banks are probably a bit more traditionally oriented, and sometimes, I mean, it's also about technologically bringing together an infrastructure that has not been used and also not been designed to interact with new digital channels, to all of a sudden, you know, interact with this new market or with these new channels. So I would say that's probably one of the biggest challenges there is out there.
Yes, thank you, Luca. And Enno, you just also in your statement you provided previously, you also used the word financial inclusion. Financial inclusion, where I would also like to touch base on with you in the last minutes of our panel. Financial inclusion, in the sense, maybe has two hemispheres. One is the inclusion, basically, with regard to smaller, let's say, to smaller companies, that they are able to access funding from the market, which they possibly wouldn't have get, let's say, from the traditional banks, because they're too small, too new in the market, they don't have a track record, no risk profile, basically, and doesn't fit the risk appetite, possibly, of traditional banks. And then we have also, of course, a second hemisphere, which is toward the end user. For the end user, basically for those people, maybe in underdeveloped countries or in developing countries, who don't have an access to a direct bank account. And thanks basically to embedded finance models, where you can open a wallet, an account, can make payments, are basically included into financial services. Maybe starting from the later point on this question, Sonal, how do you see this, let's say, the advantages, or can basically embedded finance drive financial inclusion worldwide?
Oh, absolutely. I think, you know, embedded programs are actually doing a great job at driving financial inclusion across developing countries. So whether it's a country like Bangladesh, it's India, it's Mexico, you will find a lot of examples where companies which are not traditional banks or have not been focusing on any type of financial services are actually now focusing on these embedded programs to actually go to the end consumer that they have in the deepest part of the geography of these countries to actually enable banking services for them. And let me maybe just take an example. For instance, in India, there is a leading telco player, and the telco player has a reach of about 450 million users in India, out of which 200 million users are actually rural in nature, which means they are in tier 3, tier 4 geographical areas. And recently, this telco company, and recently is I think almost 2 years since its inception now, but they've been working with, you know, some traditional lenders and banks, and they have actually been focusing on providing third-party financial products like mutual funds and investments, and actually in some cases opening up bank accounts for some of these consumers, right? And today I think they boast about 30 million customers that they've actually, you know, sort of captured into the new model of financial media. So they're doing absolutely a great job from that perspective, right? And I see that as more and more companies, and now whether it's last mile connectivity companies, telco companies, as they continue to optimize, and this is one of the things I was also referring to earlier, as they continue to optimize on their core, right, it also sort of strengthens their ability to really reach out to the end consumer in best possible ways. I mean, you're there on the consumer's mobile phone, and it's not even like a smartphone. It's a very small, simple, you know, a feature phone sort of a product. But your ability to talk in the language, making it very simple for the consumer to actually access financial services, could really be a game changer for developing countries, for sure.
Thank you, Sonal. Luca, how would you see this point of financial inclusion or the advantages?
Yeah, I mean, Sonal has essentially raised most of the relevant points. In a lot of regions in the world, and not maybe only India, but I mean, we also have activities in Southeast Asia. I mean, traditional banking infrastructure is just not reaching that many people. So you have, like, you know, Southeast Asia, 600 million people, 60% of them or even more are either unserved or underserved by traditional by traditional banks, but you have extremely young population, tech savvy, very good broadband connections, high mobile phone penetration. So it's normal that you know, it's the reaching these people and giving them access to financial products and financial services is not going to be done by building the next bank branch somewhere, but it's going to be through digital channels and either through smartphones or some other ways, but it's going to be digital. And I think that is where the future growth also of, you know, of financial services lies. But it's also the case that, you know, technology, and I mean, it's also identified by the Asian Development Bank, for instance, as the #1 driver for financial inclusion.
Thank you, Luca, for the insight. And Enno, Miriam, for, let's say, for young companies who are just, or startups who are coming to the market and possibly were lacking access, how do you, to financial, so let's say, to credit facilities, to funding for their business, how do you see that embedded finance, in which way, contributes basically to financially include them to start their business?
Yeah, it's actually what I mentioned before is when you take the small merchant in the business since 1 year making revenues, but if the small merchant would go to a bank and say, hey, I need a loan, can you give me one? The bank would say, oh no, you need 2 years at least financial statements in order to get a loan. So I think technology makes it possible that, I mean, we get access to the volumes, we see what actually is happening in the shop, and we can give them a personalized loan that is fitting the needs of the customer. I think this is also financial inclusion, yeah.
And I think financial inclusion, yes, it's very obvious that this is a very strong problem in developing countries, but I think it goes beyond that. So also in very industrialized, you could say first world countries, financial inclusion is a strong issue because you see, especially when it comes to small businesses, that there's strong movement into basically working self-employed, founding small companies and so on, and with the traditional setups of the banking industries, and this is in the end the same problem but just on another level that you're seeing in developing countries with the traditional setup of the banking industry, those companies are not being served, which costs 7.5 million jobs each year in the European Union alone, and this is something that just must not happen. So it is very much about getting the friction down, getting the complexity down, explaining to people where and when a loan, for example, makes sense, and giving them a very straightforward and easy access to the product without having them hop on their bikes or into their cars driving. Just imagine you're based in the countryside somewhere, driving for 30, 50 kilometers to the next bank branch, and then hand in, I don't know, such a stack of paper, wait 6 weeks, and then get maybe a no, most likely, because you're too young, too unexperienced in the market from their perspective, or whatever it is. Make it digital and open up basically existing offerings where credit need arises directly also to the delivery of the credit product in the end. And this is what embedded lending and embedded finance is all about.
Thank you, Enno. And thank you. For today, I think we have to close this panel right now. I'm going to look at also the time correctly. And thank you, Enno, for your participation and insights today, and Miriam and Sonal and Luca for joining this panel today and giving you better insights. We have learned today about where has basically this embedded finance emerged from, both in Europe and in Asia. We have learned about the ecosystem, the triangle, which Enno so super described, where you have the different, let's say, ecosystem endpoints which connect together to basically enable embedded finance in the market. And last but not least, of course, we have talked about the challenges, also the opportunities for banks, fintechs, and financial and non-financial companies to work together in the market rather than competing with each other. And last but not least, also highlighted the opportunity and positive impact embedded finance brings in terms of financial inclusions, both for those who are underbanked, possibly in developing countries, but also for all small companies all over the world, also including in developed countries also, which could have started their business before because they were lacking access to credit facilities. And thank you much, and embedded finance will be a topic which will be continuously discussed. Also happy here in the audience to touch with you later. Luca is also here in Berlin, and please, closing this panel for today, and thank you everybody for listening.
Thank you.
Thank you for hosting and having us.
Bye-bye.
Thank you so much. Bye.